It's Monday, April 21, 2025, our second edition of Soy Market Watch, sponsored by the Iowa Soybean Association. I'm the main presenter today, Al Kluis, Managing Director of Kluis Commodity Advisor, and I'm joined with my good friend and coworker, Bob Linneman. So we're going to spend about 10 minutes going through the program, similar to last week, but update all the slides, and certainly a lot to talk about this week in the soybean industry. I'm a Series 3 commodity broker. As such, I always need to do the industry required risk disclosure statement. I'm not going to read the whole thing, but just to let you know, the first sentence on an investment futures contract is speculative, involves a high degree of risk, and suitable only for persons who can assume the risk of loss in excess of their margin deposit. It's always my job to say that if you trade futures and options, you can lose money. The last sentence in the last paragraph is also important to go through and for me to read. The opinions expressed herein are the opinions of the author only and not the opinion of any firm the author may be affiliated or associated with. So this is put together by the Kluis team, myself, Mark Mason, Nick Repke, Bob. We all have input into this, but it does not represent what our FCM Wedbush would say. So today we're going to go through market review. We're going to first look back at what happened last week. Then we're going to get into a price summary. Pretty amazing market actions last week. Three main factors to watch this week, and I had a hard time getting down to three. I thought I might go to six, but makes me really focus on what to do. Planning progress update, chart update, and what to do this week. So what happened last week? The weather is viewed as non-threatening. Corn prices had a very impressive 30-cent rally the previous week. We gave up 6 cents a bushel. And note how the bull spreads collapsed last week. So we had seen that December bull spread really kicking into high gear, got up to about 35 and pulled back last week to about 25 or 28. I still like the spread. I still think it's positive. Farmers were aggressively selling soybeans last week. We hit some price targets for the people following our advice, made some really nice cash sales. And so there was a positive week for the people that were listing, the people that had a plan, people that had their offers in. Tariffs, Trump announced on Friday, markets were closed, that bulk ag exports are exempt from the Chinese vessel tax. And so I'm sure for all the leadership within the Soybean Association, wow, that was a big breath of fresh air. Anxiety kind of reduced. I don't think it's ever going to go away, but certainly that would have probably cost us 50 cents to $1 a bushel. So thank goodness we have the Soybean Association working behind the scenes, trying to make sure that those type of policies don't hit us. In the outside markets, the big factor last week continued to move lower. The dollar now trading at the lowest level since March of 2022. And just today, we're down another 1.25%. We're trading at about 98%. 6 weeks ago, it was trading at 110. So we really have seen our global competitiveness really improve dramatically as the U.S. dollars continue to move lower. And I don't know how next level support is probably all the way back down to 94. What happened in the bean market? We said if July futures go to 10.58, we want to make another cash sale. We traded as high as 10.59. Crude oil dropped to 4-year lows, $55 a barrel. I think if you are looking to buy farm fuel, probably have your spring stuff laid in. If not, get it bought. Even start checking on the fall fuel prices. The way the curve is on diesel prices, you should find that fall diesel prices should be cheaper than your current cash price. So always like buying that discount. And as farmers are getting busy in the field, watch your basis levels. We're getting some really aggressive basis offers from soybean processing plants and from ethanol plants that are buying corn. As farmers are busy, they're not thinking about hauling grain. They're too busy getting the crops planted. So this is the dollar index, and this is updated just as of a few minutes ago. You can see, wow, what a change from a few weeks ago. 10 weeks ago, we were up at 110. Now we're down at 98. And the long-term chart, this next support is way down at 94. So this is going to be very beneficial to our exports. Huge soybean exports announced also last week, and I think we'll continue to stay well above the pace we need. Energy prices, quite a bounce. There we went down to 55. We're stabilizing. We're down at about $1.70 a barrel here today. So be checking on your diesel prices for spring work. Be checking on prices for fall field work. This is an important part, trying to lock in your price inputs at the right time. Just coincidentally, this is the 5-year anniversary of when crude oil prices traded to minus $37 a barrel. So late April, after home heating season is done, before people start going on vacation and driving, we're really in an optimal window in here quite often to book fuel. So this is what we did last week. We dropped 8 cents a bushel on corn. I think earlier I'd said 6, but we're at 482. At 490 has been tough to get through. Dropped 7 cents a bushel last week on soybeans, but that's okay. We'd rallied 66 cents a bushel the week before, and wheat market continues to grind lower. On a weekly basis, we did see crude oil prices close higher, and the U.S. dollar continues to slide. So I think it's always nice to look not only just what's the market doing today, where do we close on the week, and how does that compare to the previous year? Three main factors this week. I hate to always start out with this, but watching what's going on in Washington, D.C., it seems like those headlines really drive the stock and bond market up and the grain markets. And there's optimism that we will someday see talks start between the administration and China. And it's kind of a personality battle that's developed in terms of who's going to blink first. USDA crop progress report likely to show very rapid planting across the U.S., especially looking at the upper Midwest and northern plains, unfortunately, staying way too wet down south in southern Missouri, Illinois through the Delta, so they're having some pretty significant planting delays. And I think you're going to see an uptick in prevent plant acres in that part of the world. Grain export sales are Thursday, and wow, last week Thursday we had great numbers. Look for another good report this week. I always like looking at charts. If you've been to the seminars and the webinars we do, I think it gives you a good roadmap of where we've been. This is the weekly corn chart. We had the low last August at right about 360. Unusual pattern. We rallied up to over $5 a bushel by early February and have basically been in a trading channel since then, just trying to get the market back up to $5, $5.10, somewhere in there, and I want to be making some more sales. For new crop, we had the market run up to a lot of resistance up at 479. This is why you don't ever use even numbers. Right now, depending on the storage situation for the farmer, we have 20-30% forward sold and would like to get back up in that 480 area to do some more. So it's been a pretty impressive rebound over the last few weeks, but we're still below the February high.
Al, it might be worth mentioning too on some of these charts that the when we were at those highs, the funds were long, in the corn market over 300,000 contracts. And here we are, 50 to 70,000 is the estimate, somewhere in that range long at this time. And we're very similar price points. So if that money flow comes back to the long side of the grain market, it could get real interesting this spring.
Yeah, no, we just need a weather story of some kind, but that's a very valid point, Bob, because I always talk about supply, demand, and the flow of money. And believe it or not, I have some friends that are stockbrokers. They felt that corn was a safe place to put money, a lot safer than the stock market the last few days or weeks. So it's a flight to quality has been buying corn. Very unusual, but money moves fast. Soybeans, boy, this has been quite an extended trading channel, down around 960, 970 on the bottom, up at around 1080 on the top. We had the offer in a July contract up at 1058. I thought 1060 would be resistance. And I just updated my charts. If I looked at a daily soybean continuation chart, 5 out of the last 6 days, we've traded May soybeans up right at around 1043, the 200-day moving average, but we just can't seem to punch through that price level. However, it's not a question. I think we will, and then that'll turn into a level of support. For November beans, we've got a potential double top in here up at 1040. We also have support down at 960 and 970. When I look at planted soybean acreage, if the USDA March 31st report is right, lowest planted acreage, I believe, since 2016. I think we'll have a better, much better pricing opportunity for soybeans sometime later this year. Just be patient. Most farmers need at least 11 to 1150 futures to lock in a break even. So right now, I think the longer term trend is up, and it can really be bad for your farm if you sell ahead below your cost of production. So that's the chart. What do we want to do this week? We want to have offers in above the market. Like I said, prices hit our target at July futures at 1058. For corn, we're looking July corn going up, testing that high at 518. And check on the fuel prices and cost. And you look through the fourth quarter of 2025, and I think, one of the advantages we're in right now with the fear of a global recession is the ability to lock in some cheaper inputs. Also, this was really interesting, Bob. We taught the class together last week. Be aware of the cash bids and note the cash price of your corn and soybeans in May and June versus the large discount into August, September. Okay, if you don't believe me, just call your local elevator or go to their website and look at it. And you're going to find that if you store corn and soybeans into August, September, you're going to take anywhere from a 20 cent on corn, 50 cent on soybean hit because of the alignment of the futures market and basis levels. You have to have a plan. Last August at a farm show, and it's some pretty long faces, people coming in. Corn prices have been down, 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 put a bottom in right about the end of the farm show. And this is very typical. So don't overstay the cash market. You have to have a plan. You really have to stay disciplined, even if the weather is bad in your area. So Bob, I've been doing all the talking. I guess the other thing to watch out for today is any thoughts on planting progress? That report comes out 3 o'clock Central Time.
Yeah, this afternoon we'll get our first kind of glimpse at it, and I think we're looking, the market's anywhere from 10 to 12% Al, which would be a big number, historically versus a 5-year average. But I don't know that the trade really gets too surprised like we used to, meaning that we've seen the U.S. farmer plant a third of the nation's corn crop in 1 week.
Yeah.
So I think that this early in the planting season, I don't know that anyone's going to get too nervous. Even if you look back to last year, we really didn't get too nervous. So I don't see a lot of impact here today, even if it does come in near that 10 or 12% line, but it's more of the trend, Al, was what
Yeah.
we're going to need to watch.
Very, very well said. And so we'll see. I guess the one thing I always watch and historically is that to get the trend line yield on corn, you've got to be 50% planted by May 10th. And I think we're going to get there. I also think that if the weather pattern that's in the forecast is correct, that we're going to see continued planting delays in southern Missouri, Illinois, Kentucky, and Tennessee. And some of those folks, unfortunately, are already talking about prevent plant. So the big acreage number for corn, I think, is still attainable, but I think that's going to kind of put a cap on it.
Yep, I would agree with that. And if you go back and look at those areas outside of the major corn belt, Al, if they start throwing prevent plant in there, then the March planting intentions number we saw is probably the biggest number we'll see all year.
Yeah, very good point. Yes. Well, I want to always try to keep these about 10, 12 minutes, and but also available for questions. This is Al Kluis, 888-345-2855. Don't hesitate to call me if you want to give me a planting update or if you have a marketing question. If you like these programs, let the staff and the directors of the Iowa Soybean Association know. They're very great to work with, but we need to really let them know that as a producer that you value this. And I certainly enjoy working with the entire staff at ISA. If it's more convenient for you to email me, my direct email is Alan Kluis, alan.kluis at wedbush.com. I watch that pretty good. Traveling some this week, but I'm always proud of the fact that if people contact me, I really make an effort to get back to them within 24 hours. So, Bob, thanks for your help today. And if you like this again, please let the staff, leadership at ISA know. We'll see you next Monday.